Just because you didn't manage to buy all the Bitcoin you wanted at lower prices doesn't mean you can't still stack sats with a great risk to reward. This is how to buy the dips and best accumulate BTC during a bull cycle. Today we're going to be looking at strategies for bull market accumulation, and make sure to stick around to the end for an unbelievably good limited time look into Bitcoin offer. So right now we're just on the Bitcoin investor tool, or the 2-year moving average multiplier, which is looking at the 730-day or 2-year moving average for Bitcoin, which is this green line here, which is what we're going to use to define a Bitcoin bull market. Obviously it's a little bit up for interpretation exactly when the bull market may or may not start for Bitcoin, but if we just zoom in, we can historically see once we reclaim this green moving average, this 730-day or 2-year moving average for Bitcoin, historically this has really quite clearly defined when we're in a Bitcoin bull market, and when we're beneath it, it's the best time for Bitcoin accumulation. But as we can see recently, we have actually crossed above this line, so many people are now wondering, is the time to accumulate Bitcoin over? I'm not necessarily someone that wants to just constantly dollar cost average into Bitcoin. I want to buy at the highest risk to reward levels. Well, the good news is there is actually plenty of great strategies to continue accumulating BTC at comparatively cheap and discounted prices. And the first we're going to look at is the Fear and Greed Index. Now, what I've done for a lot of these metrics to really outline how good these work during a bull cycle is just looked at the previous bull cycle. So pretty much from the COVID 2020 dip, once we crossed back above this bull market line that we've declared as the 2-year moving average multiplier, up until pretty much the next all-time high was set at above $60,000. We can see here that the Fear and Greed Index was a really good starting point for when to maybe accumulate additional BTC on dips and pullbacks throughout the Bitcoin bull cycle. We can see here obviously when we were beneath the 2-year moving average multiplier and Bitcoin dipped fairly substantially to near $3,000 or $4,000 during the COVID 2020 crash. We had scores as low as 8 or 9 on this Fear and Greed Index. But even through the bull cycle, once we'd reclaimed that level, there were periods where this dipped fairly substantially and definitely into the fearful area. We can see as I film this now, this is a somewhat greedy sentiment with a rating of 60. But sometimes we can see here ratings of as low as 38, even as Bitcoin had gone from around $3,000 or $4,000, like we said, to over $10,000. There's still periods where people are feeling very fearful in the market. People are generally very emotional when it comes to their trading and investing, and acting as a contrarian, especially during a bull cycle, has historically outperformed. We can see here again, after this brief pullback from around $40,000 to around $30,000, again a score of 40. And once again, even up here, when Bitcoin was above $50,000, there were periods of time where the sentiment dipped into the very fearful levels of 38. So a good starting point is to just check sentiment. Obviously, social media platforms like Twitter might give you a little bit of a good indication, but a Fear and Greed Index rating like that, if we see something beneath kind of the 40, 45 level into the fearful ranges while we're in a bull cycle, it's not a bad starting point. Secondly, we have the Bitcoin funding rates, which if I just swap to the daily time frame, and I prefer the coin denominated funding rates. Obviously this metric doesn't go too far back, so we're somewhat limited on terms of historical comparisons, but I guarantee even during the bull market there will be periods that probably coincide with the Fear and Greed Index showing fearful sentiment, where this goes extremely negative, which indicate that a vast majority of traders and investors are actually shorting Bitcoin. They're trying to make money on Bitcoin's price decreasing. They're betting on further downside price action. And as you can see, these great downwards negative funding rate spikes actually tend to happen right as Bitcoin reverses. It happens after the downwards move has mainly happened, and it really signals a turning point in the Bitcoin price. And the same is true for the upside. Once these get incredibly positive, we do typically see a little bit of a turnaround and pullback in the Bitcoin price action. But specifically for accumulation, it may be worth checking the funding rates chart to actually see when maybe people have started to short Bitcoin during a bull market, which is a crazy strategy. Obviously, some people will do it, but we can see historically acting as a contrarian to this has proved to be quite a profitable venture. And especially if we look at something like the active address sentiment indicator, and I've just lined this up alongside the funding rates chart, and we can see once we have these huge downwards red spikes in the funding rates, I actually lined up really nicely with these active address sentiment indicator, one of our more short-term on-chain metrics. giving these discounted buy areas. If we just scroll down a little bit on this page here, we can see that this is looking at the 28-day percentage change in price compared to the 28-day change in active addresses. So once we actually see a big flush to the downside in Bitcoin's price action, once we see people maybe running fearful, not wanting to buy or accumulate, especially once we see some downwards price action, this gives us a nice buy signal, especially once it crosses back above. And again, during a bull cycle, this works pretty well. The signals are a little rarer, but once they occur, again, very great opportunities for accumulating during a bull cycle. Now, another one, and this again isn't going to give too many signals, at least initially, is the Bitcoin hash ribbons indicator. Like we said, this is going to look from the COVID 2020 crash to pretty much the first all-time high we set above $64,000. And we can see here, once we'd actually rebounded from that $3,000 to $4,000 level, we did have two signals on the hash ribbons indicator that indicated a buy signal. Once this background area turns red, it indicates that the shorter term hash rate has dipped beneath the longer term hash rate average, potentially indicating some minor capitulation. And even though, like we said, these are quite rare signals, once this turns to this lighter shade, this pinky color, and especially once it turns to white and this clear background on this chart, that's an absolutely great buy signal for Bitcoin. And especially if this occurs during a bull cycle, like we said, it's one of the best, strongest, most reliable signals we have. Now, a couple other great metrics, great strategies we can implement is looking at something like the active address growth trend. One of the new charts we have for advanced and pro site subscribers under the portfolio tools section, we can actually look at this active address growth trend and isolate certain moving averages derived from this data. So for example, I've got loaded up here the 14-day and the 60-day moving average of active address growth. And we can see here, once this longer term moving average is above this short term, so once this 60-day or this 2-month moving average of the active address growth trend metric, we can see once that's above the 14-day or the 2-week, this has provided a great buy opportunity, especially during bull cycles. So again, if we're to draw just a rough indication of where the 2-year moving average multiplier was, we can see that once this dips beneath this shorter term moving average, beneath this longer term moving average, it provided absolutely great buy and great accumulation areas during a bull cycle. Once we get a little bit of a pullback, obviously we can see that maybe after a 10-20% price pullback, that might not be a bad area to accumulate. But once we actually see on-chain fundamental data pointing towards the fact that maybe new retail aren't coming into the space as rapidly as they were, there's not as many new addresses, new wallets being created, this is some fundamental real data that actually gives us a very clear and reliable indication that we're experiencing a bit of a pullback in which accumulation actually gives a great risk to reward. And lastly, we have the Bitcoin Crosby Ratio, again, under the portfolio tools section for pro site subscribers. And I've just isolated once more to this COVID 2020 to first all-time high period we had here. And we can see, obviously, it gave a great buy signal during this dip, but if we're looking at specifically bull market accumulation, we can see that we can actually almost remove this green buy area because Bitcoin typically doesn't have long sustained pullbacks. It's usually big, quick dips to the downside. We can actually look to this zero line, this middle line on this metric as almost the new accumulation territory. And what we can do is, again, if we just look to these areas where Bitcoin dipped to or beneath this black line here, all were absolutely great areas to accumulate during the bull cycle. Obviously, once we got this very exponential price movement to the upside, it didn't give as many signals. But realistically, those aren't the areas where you really want to be accumulating. We want to try and buy BTC at the absolute highest risk to reward, meaning there's very little chance of extended downside once we've actually purchased additional BTC. And what we can actually do with the Crosby Ratio is load up TradingView, where site subscribers also gain access to the TradingView indicator of the Crosby Ratio. And once again, we'll just open the Bitcoin investor tool to once again see once Bitcoin is in what we defined as a bull market during these periods here, we get the same metric we have on site, but with this Crosby Ratio on TradingView, what we can actually do is look at alternate timeframes. So if I just drop down to a much lower time frame, such as the 2-hour time frame, this is obviously going to give us a lot more data, but also gives us a lot more opportunity to potentially accumulate. So again, just looking at this period after the COVID 2020 dip, once we reclaim this 2-year moving average, before we really hit this upper red line on the Bitcoin investor tool, the 2-year moving average multiplied by 5, we can see that there was plenty of opportunities to accumulate just based on this indicator. If I just add these lines here, I've actually looked and added all of the lines in which Bitcoin dipped into this green buy area, apart from that one, which I've just added now, for the Bitcoin price action. So we can see here on every single one of these signals, it gave you a really great entry for Bitcoin price action. That was followed by very little to almost no drawdown in most circumstances, which is what we really want, because anyone can buy Bitcoin at any time, and obviously during a bull cycle there's increased chances that it's going to be a fairly decent price. But the best thing we can do is buy when there's very little drawdown following that accumulation, because this gives us the most confidence in our position and the highest probability of profitability going forward. And we can see every single one of these signals on this lower time frame resulted in a great level to purchase additional BTC before ultimately we topped out and Bitcoin peaked at around $64,000. Also, if you haven't already, please don't forget to like this video, subscribe to the channel and turn on notifications to ensure you're receiving all of our content as soon as it's released. And make sure to check out all the resources we discussed today, as well as the many more that are all available on lookintobitcoin.com, your number one source for Bitcoin information. So just to summarize, just because we've now exited areas of Bitcoin's cheapest accumulation doesn't mean we still can't scoop up discounted BTC with great risk to reward throughout the bull cycle. And using a number of shorter term on-chain data points and market cycle metrics, we can very easily and more importantly accurately outline price dips and pullbacks that have historically rewarded swing traders and those looking to really maximize their profitability throughout the bull cycle. And especially when identifying points of confluence amongst multiple metrics, we can continue to load up on cheaper BTC even as prices increase. Like we saw with the active address growth trend, the Crosby Ratio, the funding rates, the fear and greed, the active address sentiment indicator, they all provided, especially when we got multiple signals down, multiple of these indicators, absolutely opportune moments to load up additional BTC to accumulate even at higher prices that still give a great risk to reward that lead to great trades and investments. If you like this video, then please visit lookintobitcoin.com, where we're currently offering an unbelievable Black Friday discount that will provide a 35% discount for new subscribers on our advanced plan, as well as a whopping 70% discount to upgrade to our pro plan that provides access to all of our Look Into Bitcoin premium features. But make sure to act fast, as these offers will only last until Cyber Monday, only a few days away. Simply click on the upgrade button on our site to access all of these incredible deals. Thank you all very much for watching, and I'll see you in the next one.